let's start with equities.
Sure.
What headlines do you decide to pay attention to, and which ones do you not, if you want to put a portfolio together?
Yeah, so I mean, I think the headlines around Trump, you know, they're probably a little bit more drama than they are real market impact. And I think that's why you really saw equity markets take that sort of immediate dip down, but then sort of gradually recover. And I think what was really being priced in there is sort of a rotation to what really matters, which is really today and Yellen's testimony, and then obviously towards the end of the week, earnings. So we're going to start kicking off really in earnest earnings season. And I think that's where stock pickers are really going to put most of their energy and intellect over the course of the next several weeks.
What's interesting, though, is that Neil Duane of Allianz was on earlier, and he sort of took the opposite view, more negative view. Here's what he had to say.
I think the US is now staring into is the recession in 18 or 19 or 20, but we know it's coming because this has been the weakest and longest economic expansion we've seen in the last 100 years.
So basically arguing that the dip was actually more on a fundamental basis, not necessarily on headlines. Matt, it seems like the dollar and yields would agree with that assessment. What's your take?
Well, the reality is that yields haven't really been moving all that much outside of a couple weeks over the, since Sintra. And so, look, I think what we're seeing here is that government bond yields settle into a nice range ahead of Yellen. One of the things that I paid attention to yesterday outside of the Trump headlines was some quotes from Philadelphia Fed President Harker talking a little bit about how inflation may start to weigh on his mind as we move into the end of the year. Remember, the Fed is still expected to hike rates in December, and if inflation doesn't start moving back to their 2% target, they're going to have a pretty healthy debate about that.